in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Bond yields from Japan to the United States extending their rally, with markets pricing in a move towards a Fed rate hike here in the United States. This all as oil prices rise, with Washington and Tehran stuck in gridlock over any deal. And the White House announcing a farm goods agreement with China following the Trump-Xi summit. Let's get a check on markets around the world now. First, let's go to Winnie Su in Hong Kong for the latest from Asia. Winnie.
Good morning, Bonnie. We're seeing Asian stocks under a bit of pressure today, with oil rising for a third day on these inflationary concerns. Now, we did have a set of numbers from China coming through, which all turned out to be quite disappointing, from fixed asset investment to retail sales numbers, all missing estimates and pointing to a slowdown in the economy. Now, bucking the trend, you're looking at South Korea's Kospi index actually rising after Samsung Electronics said that they are in negotiation with its biggest labor union. Now you flip aboard and take a look at Asia bonds, as you mentioned, tracking those declines globally, especially with Japan's 30-year bond yield here hitting its highest level since 1999. Also goes to show how you still have these concerns around fiscal policy, with Prime Minister Takaichi now announcing an extra budget due to these concerns around the impact from the Iran war.
Winnie, thank you so much. Winnie Su there in Hong Kong. Now let's get over to London for a look at Europe. Here's Charlie Wells. Charlie.
Good morning, Vonnie. Well, it's those bond yields across the continent that really are in focus this morning. So we're seeing a little bit of easing in the UK, and that's after a lot of concerns here, a lot of elevation over the past few days. But you had some comments coming from Andy Burnham, the front runner in that potential leadership contest here in the UK, talking over the weekend how he supports fiscal rule. So that could actually be giving just a little bit of easing here, despite a lot of the uptick that we've seen, especially relative to the other yields across the continent. Let's flip and talk about sterling, because we're seeing a little bit of a similar story here. We know that sterling had been flirting with some of its lowest levels so far in 2026, but we're seeing a little bit of easing this morning, potentially on the back of some of those comments over the weekend.
Charlie, thank you so much. Charlie Wells there in London. Well, here in the US, let's keep the Strait of Hormuz in focus. It is still closed. Brent crude trading above 110. And in fact, the December contract for both Brent and WTI hit records today, having an impact on futures, although we have now turned positive barely on NASDAQ 100 futures. And if we flip up the word and look at bond yields, that's where we'll get most of our market signaling today, right? Again, we're easing off the extremes. We actually topped 410 on the 2-year earlier on. We're now at 4776, the 10-year 459.34, and the 30-year yield also coming back a basis point, but we had topped 513. Ed Yardeni talking about perhaps the market sending a little message to Kevin Warsh, the now new Fed chair, and saying that it will have to pivot the FOMC to lacking an easing bias, that by April, and that perhaps by July we'll actually get a rate hike. But the market is very concerned that Kevin Warsh will tolerate inflation for longer. All right, let's get to some individual stock movers now. Here's Chloe Melly in London.
Good morning, Bonnie. Let's start with some M&A this morning. The French advertising company Publicis is buying LiveRamp in a $2.2 billion deal, and that is leading to a massive rally in those LiveRamp shares this morning, more than 26%. And we are also seeing shares in Publicis rise in Paris this morning, because it's a transaction that will really boost its AI capabilities as well. So we're seeing this deal be reacted to very positively on both sides this morning. Moving on to another M&A story, and Dominion Energy is also rallying this morning. It is up more than 10% as NextEra Energy is said to be discussing a deal that would value Dominion at $66 billion. So that would be the largest power deal on record, and we're seeing that reflected in those shares this morning. And finally, United Health is down. It's a little bit weak this morning after Berkshire Hathaway exited its stake in the company. The portfolio changes also included shedding companies like Amazon, Visa, and MasterCard, but we're seeing United Health in particular see that weakness this morning, down about 5% on the back of that.
All right, Chloe Melly, thank you so much. She'll be back later in the hour. Also coming up this hour, more on this market with Sharon Bell of Goldman Sachs, and a closer look at the US-China trade deal with Jude Blanchette of RAND China Research Center. Oil then rising for a third day as President Trump keeps the pressure on and grows impatient with Iran, posting on Truth Social, quote, "The clock is ticking. And they better get moving fast, or there won't be anything left of them. Time is of the essence." Bloomberg's Jumana Brzezinski joins now for more. So once again, this pressure on Iran, rhetorical pressure, Jumana, are we seeing anything physical or kinetic?
You can see it in global markets today, reacting to the real possibility of a resumption of hostilities. And also, Vonnie, I think it's important to note that we are in a very different environment in terms of sentiment, expectations than we were a couple of days ago before that Trump-Xi summit. A lot of people were placing hopes on some form of a diplomatic breakthrough after the two leaders met. And instead, we got a lot of platitudes out of the Chinese president and Chinese foreign ministry, but nothing really that would suggest that they're going to actually exert any influence in terms of bringing Iran to the negotiating table. And if anything, the sentiment has taken a way turn for the worse overnight. That True Social post, as you were saying, another threat coming through from President Trump, suggesting that the clock is ticking and Iran don't have a lot of time anymore to come to the table and agree to that peace deal. Now, over the course of the weekend, we've also heard back from the Iranian side, Iranian state media suggesting that what the U.S. are asking for is still too maximalist. They say that these are not demands that they can consider yielding to or making concessions to, and so still very, very far apart. At the same time, we speak of even more activity in the region. Yesterday, on Sunday, a drone struck a nuclear facility in Abu Dhabi. This is a civilian nuclear facility, accounts for about 25% of the electricity generation in Abu Dhabi. It caused a fire. Thankfully, no radiological leaks. But again, another reminder that Iran can continue to cause damage on energy infrastructure. Equally, overnight, Saudi Arabia's Ministry of Defense saying that they too had intercepted 3 drones coming through from Iraq. So once again, we're in a situation where ultimately President Trump has to make a decision. Do you go down the path of another round of kinetic military action, or do you continue with the economic blockade? Because as it stands right now, we are still in a state of impasse.
All right, Jumana, thank you so much. Jumana Brissecci there for us in London today. Over in Washington, the White House announcing China has agreed to buy at least $17 billion worth of agricultural products from the U.S. through 2028, as well as to establish boards of trade and investment following last week's summit between Presidents Trump and Xi. Joining us now is Bloomberg's Brendan Murray. Put this figure into context for us, Brendan. What is it annually, and how does that compare to what China used to usually buy from the U.S.?
Yeah, so $17 billion in agricultural products, and those are U.S. exports to China, would really just put put China back to where it was a couple of years ago. It would import about 20 to 25 billion, and so and they stopped those essentially over the past year during the trade war as Trump rolled out all of his tariffs. So really, this is just resetting the relationship on the ag front back to where it was, and you can see that in the price of corn and soybeans and wheat today. They rose a little bit, but they didn't retrace all of the losses that were posted last week when the summit yielded somewhat disappointing results for American farmers.
Brendan, thank you so much. That is Bloomberg's Brendan Murray, our trade czar. G7 finance officials meeting in Paris, meanwhile, amid that global bond sell-off and, of course, the stalemate with Iran. U.S. Treasury Secretary Scott Bessent asking the G7 nations and others to, quote, follow the sanctions regimes so that we can crack down on the illicit finance that is fueling the Iranian war machine and get this money back to the Iranian people. Bloomberg's Oliver Crook is live from Paris, where the officials look to be taking a family photo right behind him right now. So, Ollie, will anybody listen to the Treasury Secretary and do his bidding?
Well, that's a big question, Vonnie. I think that for some of the Europeans in G7, potentially it's an opportunity to get on Team Trump on some of these issues on Iran, where they've been really reluctant to do so in any sort of kinetic or military fashion. And we've heard a lot of dissatisfaction from the President of the United States being very critical of G7 nations for not participating in the war in any sort of active way. So potentially, potentially additional sanctions on Iran is something that the Treasury Secretary has sort of floated and put out there. Is there some way that maybe rhetorically, in some way, the G7 can get on board with that to try to get onto a sort of more of the same page with the Trump administration? But again, if we're talking about additional sanctions on Iran or enforcing the sanctions on Iran, sanctions are a very sort of slow burning impact that you have on the Iranian economy. That does not sound like a war that is about to end. And that is the main concern for finance ministers and central bankers governed over here, is to see what the impact is going to be economically, not just on inflation, but again, on this economic side. The French economy is a very good example, who's hosting this meeting today. They stagnated in the first quarter. And this conversation about stagflation is getting louder and louder and louder, and it is now spilling into the place where it really matters, Vonnie, and that is the bond market.
Absolutely. I mean, these are finance ministers for the most part, Ollie, but how much is the conversation around central banks coming up given this move to higher bond yields globally?
It's a very active conversation. I think for the finance ministers, there's going to be a lot of conversations between them and the finance ministers. You'll see behind me there, Christine Lagarde is there. So are the heads of the other G7 central banks, with the exception of the Fed, obviously, because there's a transition happening there. But we're going to have this conversation about the read-through, right? What kind of fiscal policy can you have, can you implement to dampen the energy shock while not stoking inflation? I think it's going to be a very active conversation for everybody in the room behind us. And also the nature of this inflation, Vonnie. As we've learned over the last few years, all inflation is created differently. Is this inflation that is going to stay segregated into the energy sort of side of things, or are we going to talk about an extending to other parts of the inflation complex? And that is the big concern for finance ministers who are gathering here. And we'll have a very interesting conversation with the head of the Bundesbank and the French Central Bank tomorrow, and we'll ask them exactly that question.
Cannot wait for that. Ollie, thank you so much. That's Oliver Cook in Paris, where, again, there's a family photo happening behind him with the G7 ministers. So don't miss Oliver's exclusive interviews. He's got the Bank of France Governor François Villeroy de Gallo and the Bundesbank President Joachim Nagel. They're both coming tomorrow. Now to other top stories trending on the terminal this morning. Elon Musk says he's back in Texas working on plans for a SpaceX IPO. Musk spoke virtually at the Smart Mobility Summit in Tel Aviv. Sources say the IPO could happen as soon as this week. The company is looking to raise as much as $75 billion on a valuation of more than $2 trillion, making it the largest IPO of all time. China's growth slowed across the board in April. Investment resumed declines, consumption deteriorated, and industrial production grew at its weakest pace in nearly 3 years. The slowdown is renewing calls for more aggressive stimulus. Hedge funds and asset managers piled into bearish sterling option bets last week after Andy Burnham secured a pathway to challenge Keir Starmer for UK Prime Minister. The bets signal fears a potential Burnham premiership could mean looser fiscal policy. Coming up, stocks falling as oil climbs. More with Sharon Bell of Goldman Sachs. This is Bloomberg.
You've seen the bond market very concerned about the conflict, what the impact to inflation is going to be, how central banks are going to have to respond, and yet the equity market has been able to look through it and really focus a bit more on the tech side and continued underlying macro strength in key parts of the world. There is a risk that if the conflict extends and you see this continued rise in oil prices, then the bond yield side then becomes something that the equity market can no longer ignore. So it's almost a key transmission for the equity market to really sit up and take notice of the risks around the geopolitical crisis.
All right, that was Seema Shah there. Stock futures lower here in the United States after the S&P 500 snapped its record rally. Oil climbing higher as well. We did hit that record, though, of 7,501, and it's just a little bit off that right now. Joining us is Sharon Bell, Senior Equity Strategist at Goldman Sachs. Sharon, you concentrate more on European equities, and that's not been quite the case with European equities. Does this global bond sell-off really impact things further in Europe, or can Europe look through some of that, global bond sell-off as well?
Well, I think a lot of the global bond sell-off centres in Europe. Europe has got inflation concerns. It's an energy importer. It's got weak economic growth, which doesn't help it at the moment because it's also got quite constrained fiscal positions in many countries, France, for example, but also the UK, where there's also political concerns too. So I think definitely it's a restraint on European markets.
So investors are getting less compensation for owning stocks over bonds in Europe at the moment. I mean, in that situation, what do you do? Do you just get out of stocks completely?
Look, I think that it is fair to say that the European market, it may have underperformed the US and Asia this year, but it's still done okay, and it would have still outperformed bonds. And I guess the advantage of equities over bonds at times like this is equities are, to some extent, and the corporates behind them are some of the reason for the higher inflation. They're passing on the higher prices and therefore making more money in nominal terms. Equities provide you some sort of hedge to higher energy prices because, of course, Europe also, although it isn't a big energy producer, there are a lot of energy companies within the context of the index. So I do think that somewhat European equities hedge some of these risks, but not completely. And you could see both bonds and equities sell off at the same time.
Which is what we have been seeing, from time to time, regularly, in fact, in the United States. The thing is, we just had a blowout earnings quarter in the United States. What's the outlook for earnings across Europe and margins in particular?
Yeah, it's a great question. So I wouldn't describe the earnings season in Europe in quite the same wonderful terms as you had in the US. I mean, in the US, the consensus now expects over 20% earnings growth this year in the S&P. I mean, for Europe, it's pretty good. Double-digit earnings growth expected by the consensus this year as well. And you might think, well, where is that coming from, given that European economic growth is quite weak? European companies are global in their exposure. And yes, we don't have the same proportion of tech companies in the index, but we do have a lot of commodity stocks in the index. We do have some tech companies in the index. We have industrials in the index. We have utilities in the index, all of which are growing pretty well. So actually, yes, there is a contingent of the European market, which is also gaining and seeing good earnings growth out of this, but not as good as the US. We saw an upside surprise to the earnings season, but more like low single digits rather than the surprises that we had in the US, which were much bigger.
We had a really outsized move in gilts, obviously, with all the political turmoil in the last couple of days. How many hikes from the Bank of England do you see this year, and will that calm the UK bond market?
Well, I don't think it would calm the UK bond market if they're being driven by higher inflation. And of course, the bond market is also worried about political risk as well. So it doesn't seem to me that hikes would particularly calm the market on either of those fronts. But we're not looking for hikes, actually, and we're very different from the market in that context. We think the Bank of England's more likely to pause rather than raise rates because, yes, we do see inflation being sticky and higher now, but we see weak economic growth and we see a weakening labour market as well. So there's a balance for the Bank of England to think about here.
That would be quite the eventuality if the Bank of England doesn't hike at all this year. In that scenario, then, what would you be looking to get into in terms of equities if there weren't to be any hikes? What would look attractive right now?
Well, I think I would base my view on equities and where to go within the equity markets, less on the hiking chances, but more on where can you get growth in Europe. It is quite tricky to get growth in Europe. I mean, I think there are places, though, that you can look at. Banks are doing quite well. Higher interest rates generally across the board, higher yield curve, steeper yield curve as well, that we're seeing at the moment. It's not such a bad place to be in the banks, provided you don't see a recession. An environment like that obviously would cross them. Tech stocks in Europe, a little bit cheaper than elsewhere, still have a lot of growth in them. Renewables companies in Europe, we need a lot of energy, maybe aerospace and defence as well, given that Europe needs to step up its spending there. So that's where I would be homing in.
Sharon, at what point does Brent crude become, much more of a problem for European companies? Are you surprised that they've been managing to hold up so far? I mean, we're at 111 a barrel now on the front month contract.
Yeah, I think we are surprised. The whole market's surprised in a way. We went into this, we would have expected probably higher oil prices than we actually have, given how long the Straits of Hormuz have been closed. But anyway, even with oil prices in the early hundreds, we're not seeing necessarily the damaging impact on growth that perhaps people may have expected. We've just had a conference here in London, and consumer companies speaking there were saying that actually they're not seeing it so badly hit their first quarter. That being said, they probably will start seeing hits as we go through this year, as consumers are digesting an environment of a weak labour market, therefore not the wage growth that they had in 2022 or 2023, and at the same time having to digest higher inflation. So, yeah, I do think it will be a nasty mix for the second half of this year.
All right, Sharon, we're looking forward to having you back. Sharon Bell of Goldman Sachs there, calling for no hikes from the Bank of England this year. Coming up, President Trump's latest construction venture, a helipad. A look at that and what else is making headlines in your front page news. That's next. This is Bloomberg. 9:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Bond yields from Japan to the United States extending their rally, with markets pricing moving towards a Fed rate hike. This as oil prices rise, with Washington and Tehran stuck in gridlock over any deal. And the White House announcing a farm goods agreement with China following the Trump-Xi summit. So let's take a look at those markets then. We have Brent crude trading above 110 a barrel. The December contracts on Brent and WTI are at records today. S&P futures, as you might imagine then, pointed lower. That's after Friday's decline as well. But nevertheless, we had 7 straight weeks of gains. Even with that decline on Friday, it wasn't enough to erase the weekly gain. Nasdaq 100 futures also pointed pretty fractionally lower. Mark Chandler of Brown Brothers Harriman saying this global bond rout is edging towards dangerous territory, and we're seeing that around the world today. But if we look at the United States, treasuries are sort of off their lows. We have the 2-year yield at 408.18 now. It had topped 410 earlier. The 10-year yield had topped 460. We're back below that level. Same with the 30-year yield. We were about 2 basis points higher earlier, but still we're basically in a new range at this point. It is fascinating to watch this global bond move. As Ed Yardeni says, the bond market giving the new Fed chair a big Bronx cheer on Friday. We'll see if that continues. Let's get to some individual movers now. Here's Chloe Melly. Chloe.
Good morning, Bonnie. It's a massive rally for LiveRamp this morning, up more than 26% as it is getting bought by the French advertising company Publicis in a $2.2 billion deal. And we've actually also seen Publicis shares move higher this morning in Paris because it is a transaction that will really boost its AI capabilities. And so we are seeing this deal being seen very positively, very much across the board this morning. Moving on to Dominion Energy, another M&A story. Dominion is up this morning in pre-market trading about 11% as Next Era Energy is set to be considering a deal for that company that would value Dominion at about $66 billion. That would be the largest ever power deal. And so we are seeing that reflected in those shares this morning. And finally, Regeneron Pharmaceuticals is down. It's seen a bit of weakness this morning in pre-market trading, down more than 10% after some disappointing trial data on a skin cancer drug, with analysts saying this is yet another disappointment in terms of R&D for that company, and it's piling even more pressure on that stock.
Chloe, thank you so much. That's Chloe Melly there in London. Let's get back to the bond market now. The sell-off easing just maybe a tiny little bit, at least in the United States. Still yields elevated around the world as oil prices rise, and this new scenario is emerging. Let's bring in Bloomberg's Ven Ram for more. Ven, is this just a repricing to reflect reality, inflationary reality, or are we getting into what Brown Brothers Harriman's Mark Chandler is calling a danger zone now?
Well, it's definitely in the danger zone if you're talking about the longer dated yields, Vonnie. I think that the 30-year yield at 512, it sounds like an opportunity of a few years, because you've got to understand what's going on with the rate setup. As you mentioned, inflation is becoming a big entrenched problem, and my suspicion is that the front end of the curve is underpricing the risk. The long end has woken up to the risk of inflation staying higher for longer. But if you look at the front end, the 2-year yield, it was below 4% until a few days ago. And I had been calling for a long time that was unsustainable. Now we have seen a move towards 410. I think that we are going to stay in a 410 to 420 range broadly here until we know which way Kevin Walsh is going to be inclined. Of course, we haven't heard very much from him since he was nominated to office, but we will see in the coming weeks. I think that they will have to revise up their summary of economic projections to acknowledge that inflation is on the upside, and their core PCE forecast of 2.7% for 2026 looks completely diminutive and out of date.
Yeah, and I mean, this bond market is basically saying, come on, you need to hike, at least with levels that we're seeing now. How long would the new Fed chair tolerate no hikes, assuming that's what the FOMC will allow him to do or come to a consensus on then?
Well, I think that, the markets may be reading Kevin Walsh wrong. I think, but if you look at all his previous pronouncements before he wrote that piece on Wall Street Journal about how rates can go lower, all his inkling was a more hawkish leaning than someone of a dove. And I think that he may well surprise the markets by saying that, look, you know what, this war doesn't lend itself to an environment where rates can go lower. So I think that he may at the most stay put on rates for a couple of months before having to raise rates.
Yeah, Ed Jordani saying July, if not June, we will need to see a rate hike. Ben, thank you so much. That is Bloomberg's Ben Ram joining us. Rising fuel prices hitting the airline industry, with the Ryanair CFO warning of higher costs due to jet fuel prices earlier on Bloomberg. Have a listen.
We've got 80% of our jet fuel hedged at $668 a metric tonne, which is down from $760 a metric tonne last year. Those hedges run out to the back end of March 2027. So we're in a very, very strong position. We plan to grow by another 4% to 216 million passengers, having got the last of the game-changer aircrafts in.
Joining us now with more is Bloomberg's Kate Duffy. So Ryanair hedges, Kate, hedges a lot, but some other airlines don't. We've already seen Spirit fail. What's next for the industry?
Well, it's yet to remain clear what's yet to happen. But in terms of Ryanair, I mean, what's loud and clear in these results are that there are increasing costs, and it's not likely that they're going to come down anytime soon. They're complaining about crew costs going up. Also, aircraft maintenance are on the rise with older jets and with older engines under the wings of those aircraft as well. And on top of that, there's the rising fuel bill. And when I was speaking to the CFO this morning, he said that the fuel bill will increase by a few $100 million. But in comparison to other airlines, they're in a pretty good position. IAG, Lufthansa and Air France are all reporting fuel bills higher than 2 billion euros, or around about that mark. So in the grand scheme of things, Ryanair is pretty well positioned in comparison to other European airlines.
And the board very happy with Michael O'Leary already discussing extending his contract to 2032. But he has said in this earnings post call that some airlines may go bankrupt, Kate, and I guess there could be a lot of consolidation in the industry as well. You know, what are we looking at here? Is Europe going to be worse hit than the United States?
Well, what we're seeing is a huge divide between how well the airlines are faring in this quite tricky environment. As we've discussed, costs are going up. So the airlines such as Ryanair, who have got quite thin margins but are making a lot of money, are doing well. There are other airlines that maybe are faring not so well. They're struggling with the increasing costs across the board. And so this leaves a lot of opportunities for airline groups such as IAG or Air France or Lufthansa to come in and acquire these airlines. At the moment, we're seeing Air France and Lufthansa in the race for TAP, the Portuguese state-owned airline. IAG has pulled out of that race, but has said recently that it's open to opportunities in the market. So it yet remains to be seen as to what exactly they would be interested in buying, but there is a huge separation between the various airlines at the moment financially.
Kate, thank you so much. That is Bloomberg's Kate Duffy. And do tune into our interview with Ryanair CEO Michael O'Leary. That's on Surveillance at 8 a.m. Eastern. Now to other top stories trending on the terminal this morning. Elon Musk says he's back in Texas working on plans for a SpaceX IPO. Musk spoke virtually at the Smart Mobility Summit in Tel Aviv. Sources say the IPO could happen as soon as this week. The company is looking to raise as much as $75 billion on a valuation of more than $2 trillion, making it the largest IPO of all time. China's growth slowed across the board in April. Investment resumed declines, consumption deteriorated, and industrial production grew at its weakest in nearly 3 years. The slowdown is renewing calls for more aggressive stimulus. And it's the first workday since the Long Island Railroad stopped service Saturday. Workers walked off the job following a stalemate on labor deal negotiations. The MTA, which runs New York City's subways, buses and commuter rail lines, is advising people to work from home if possible. Coming up, Jude Blanchette of Rand China Research Center joins for a closer look at the US-China deals. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The clock is ticking. President Trump renewing his rhetorical pressure on Iran, posting on Truth Social, they better get moving fast or there won't be anything left of them. Time is of the essence. Iran responding earlier that it knows how to respond to the president's latest threats. Bloomberg's Kasia Klimashinska is live from Washington. Kasia, is there anything to suggest that the president will, do anything physical after this latest threat? I mean, he's threatened this kind of thing several times in the past.
So the two sides remain far apart, as we saw from this Truth Social post from President Trump. He urges Iran to make a decision to accept the proposal that the U.S. has put on the table. And yes, he is renewing his threats to resume the military attacks against Iran. I think we have to be ready and keep in mind that this is a possibility. I think this is why oil remains elevated, although the gains are not too high, because as you said, President Trump has issued such threats before. Over the weekend, we have also learned from the Iranian side more about what exactly it is that the U.S. is demanding. Of course, President Trump wants the Strait of Hormuz to be open. He also wants Iran to agree to transfer all the enriched uranium to the U.S. and also he doesn't want to pay any reparations. He doesn't want to compensate Iran for the war. He would only agree to unfreeze maybe about a quarter of the funds that the U.S. is currently keeping from Iran. Iran wants to get all those assets back, and it wants the U.S. to pay reparations. Iran also wants the U.S., of course, to open and lift its blockade of the Strait of Hormuz, while also allowing Iran to keep some sort of control over this key waterway into the future. So it doesn't look like there was any progress over the weekend. We remain where we have been now for weeks in this kind of limbo that, again, keeps especially the energy prices elevated.
Yeah, it doesn't look like either side is moving on their red lines, right? There's no negotiation, in fact, happening. When it comes to China, so China is agreeing to buy farm goods now, but as we heard from Brendan Murray earlier, we're really back to where we were before the whole trade spat happened. Not too much more that China is agreeing to do. Also, this investment board, though. What do we know about this investment board?
That sounds about right. So the two sides agreed to set up two boards for investment and for trade of goods. According to Chinese side, this could lead to some lower tariffs on some goods that the two sides see as non-critical. There has been also an agreement on purchase of agricultural products. China will buy, for example, more of U.S. beef, perhaps more of U.S. poultry, and that comes on the top of soybean purchases. But you will have the Nvidia CEO interview later today. We'll find out whether anything regarding AI and the most sophisticated chips has been discussed. The two sides also talked about Iran and oil. As we know, China is a key buyer of Iranian oil and therefore helping Iran fund this war effort. China has asked President Trump to lift sanctions on some of the Chinese entities that are buying Iranian energy, and President Trump said that he will think about it and that he will make a decision on this soon.
Meantime, Treasury Secretary Scott Bessent calling for other countries, plus G7 countries, to impose more sanctions. Kasia, thank you so much. That's Bloomberg's Kasia Klimashinska. Joining us now is Jude Blanchette, Director of the RAND China Research Center. Jude, what did this summit really bring us beyond the idea that we're sort of back to China purchasing more agricultural goods?
Yeah, it's a great question. I mean, obviously, the summit didn't deliver a whole lot in immediate outputs. I think this was the expectation going in. This was deemed to be a fairly low output summit, and it met those expectations. I think both sides got a stabilization on their own terms, so to speak. I think the Trump administration gets some breathing room from more intense China competition as it's dealing with a whole host of issues. You just talked about some of these with the previous guest. And for China, they get this new framework of a constructive U.S.-China relationship of strategic stability, which for them essentially tries to lock in the U.S. for the next few years and give them the space to say any new competitive action from the U.S. violates the terms of the truce.
Yeah, I mean, did Beijing gain any leverage with this summit, for example, on arms sales to Taiwan or in other areas?
Yeah, I mean, coming out of the summit immediately, I would have said no, but then of course we've had remarks from the president on Air Force One and in an interview with Sean Hannity, but especially the Air Force One arguments did seem to give us a whole new challenge to wrestle with, which is the president said openly that the arms sales was a key point of the discussions, that he hasn't made up his mind, he doesn't want a war right now, and that he'd have to think about it essentially. That was pretty striking, and you saw Ambassador Greer, USTR Greer, tried to, I think, sharpen the remarks a little bit on the talk show circuit yesterday. But look, that's a pretty big statement from the president, and certainly has, folks in Taipei, probably folks up on the Hill, pretty worried right now about what the president is going to do ultimately on this arms sales package.
Right, because if he didn't dismiss it out of hand, and if he basically said there was a lot of discussion about it, then that puts it in play for China. As you say, if the US breaches what China now considers to be maybe some kind of an agreement, even if it wasn't publicly spoken, then China has leverage, right? I mean, what would happen if the president delayed arms sales to Taiwan? Would that be a huge signal to the world?
Look, it's tricky now because I think to some extent the administration has created a bit of a box for itself that even if it was already considering, the arms sales package is already, quote unquote, delayed. I think the question was it going to go forward in the full package? Was it going to be split up and sort of drip fed through as a way to get Taiwan the arms they need, but not create a political spat with China? Now, kind of whatever the action that Trump ultimately makes, it will be seen in light of his comments. So this has created a bit more of political trigonometry for the White House. Previous administrations, look, these are always inherently geopolitical decisions that have been made by previous administrations. So of course these considerations have always come in, but never have we seen the thinking of the president so clearly laid out that he says, look, I heard Beijing's message. Xi Jinping talked about this a lot, and I hear it. So, and the final point I'll just say is if you look at Chinese state media over the past 24 hours, it is trying to sort of take the ball and run with it, that irrespective of what Trump does, state media is saying, yeah, look, the president got our message. He knows that, that this is a red line for Beijing.
Jude, what happens with rare earths? So we have this investment board, we have this trade board, we have, maybe a little bit of, a détente in terms of trade, but do we get the rare earths we need?
Yeah, I honestly thought Beijing, as a relatively low-cost giveaway, was going to more formally extend the quote-unquote truce. In other words, it was going to more formally indicate that export licenses for companies would be freely flowing. Beijing withheld that, and if you look at the U.S., the White House statement yesterday, the readout, the language on rare earths was pretty ill-defined. Just said China was going to basically take U.S. concerns seriously. This is one of the greater points of leverage China has. It knows it has a carotid artery that if it needs to push it, if it sees the United States as misbehaving, it can deny licenses selectively or more wholesale like it did last October. So China wasn't willing to budge on that. It doesn't sound like we got a lot. So I think that sort of Damocles hangs over there for firms who really need those specific export licenses moved through quickly on rare earths and permanent magnets.
Well, and is that the sort of Damocles back over other countries again? I mean, what about Greenland? Does that suddenly come back into focus?
Yeah, I mean, look, that's a separate issue. Your guess is as good as mine on Greenland. But I'll just say that the United States and Europe and other advanced democracies remain in a strategic bind here of we're still sourcing the overwhelming bulk of rare earths and permanent magnets from China. China has used these as political leverage and a weapon, and that hasn't changed meaningfully structurally as of May 2026. This is going to be a long-term effort by the U.S. and its allies to wiggle free from this chokehold.
Separate from this summit, Jude, I'm just curious as to what you make of China's economy right now, the slowing, and whether we will see quote-unquote aggressive stimulus or any kind of stimulus at all.
Yeah, so first of all, from Beijing's point of view, great that these numbers came out today and not in the middle of the summit. I think that would have deflated the confidence bubble a little bit. Look, China, for all the headlines we're reading about the sort of new productive forces and China's high-tech advances, it remains the case that the Chinese economy is really riddled with pathologies So, Beijing is wrestling through those. I think past performance is, in this case, a decent predictor of future behavior. Beijing is very stimulus shy. I don't think the Xi administration feels like it is that in that dire straits. This has been a running commentary for years of, will they, won't they on a major stimulus? They've been saying pretty clearly they're going to keep their powder dry until they feel like it's existential. I see no indication that even the relatively dour numbers coming out today really fundamentally shake Xi Jinping's confidence in the growth model he is pushing. And he's saying, look, folks, there's going to be pain as we shift gears here on the growth model. So let's stay the course. So I don't see any significant change on the horizon.
Jude, thank you so much for joining us this morning. That is Jude Blanchette of the Rand Center Research for China. Coming up, Nvidia earnings front and center. We'll get you set up for your week ahead. This is Bloomberg. Now, look at what's ahead this week. First up, the main event, Nvidia earnings coming on Wednesday. We also get the latest Fed minutes due Wednesday. Plus, another round of jobless claims data and PMIs on Thursday. Let's take a look at some movers before the bell now. Dominion Energy is higher by almost 12%. Next year is said to be in discussions for a deal that would value Dominion at $66 billion. Then we have LiveRamp up 26% this morning. This, of course, on a potential acquisition. Publicis looking to buy the data collaboration platform in a $2 billion AI deal, and space stocks rallying as Elon Musk says he wants to get the SpaceX IPO underway soon. Here is your macro picture for the day and the week ahead. Nasdaq 100 futures pointed lower, bond yields holding on but generally higher.